If you don't trade with the supply and demand, and in particularly the level 2 data, the one we have right here, level 2 data based liquidity zones, then you are really trying to search something in the dark that you're never able to find out. The reason is that level 2 is the only one can tell you, can show you what is happening in the market real time as a price auction going on. This is July 2nd chart. um, I want you to, the way you should be analyzing this chart, we are trying to find out the outliers. For example, like 5563, 5563. I think if you look at, okay, right here, 5563 is 298. You can see those numbers are stacked here. We are trying to find out what are the outliers, higher quantity liquidity available in the level 2 codes pending to execute. Those are the contracts we are trying to plot on the chart so that you can make the information. Within that, you need to focus only on the zones that are persistent for a long time. You can see some of the orders are coming in and then vanishing, coming in, vanishing. You need to ignore those things. But anytime you can see that line extended, the order stayed for a long time, we call it as persistent liquidity zones. Those are the zones you really need to focus on. Why? Market loves to go to the nearest highest liquidity zone. Okay, let me repeat that again. Market always tend to go towards the nearest highest liquidity zone. Take a look at today. This is ES futures from the morning. Okay, let's go back. Okay, let's look at from the morning. The morning started. There is not much liquidity up, down, but you can see there's a lot of stacked of orders are packed here on the around like 55.40, almost like from 9:40 to 10:30. Market stayed below. It retested once, but eventually it took all the liquidity and then choppy again. Market pulled back again, where we don't have much liquidity on the bottom, we have liquidity on the top. Eventually market went there, took out all the liquidity. Okay, so anytime the market breaks out, take out all the liquidity, breaks out, pull back. When I say pull back, I'm talking about pull back to the exact same region where the liquidity was. That is the greatest place to entry. Again, market getting choppy while building up the liquidity on top at 59.49. What happened? As I said, market moved towards liquidity, took out everything, and then there was a consolidation pullback. Again, okay, let's go up. All right, and then now again market after breakout it moved further. You can see the liquidity is starting to build up on top. Still, market always love to go towards liquidity, take the liquidity out. So this is something you have to you should be using these liquidity zones in a trading. That's why do not trade on based on level 1 alone. Level 2 is critical way to enter. So being that said, what is the perfect way to enter? I'm looking at those liquidity zones on ES, but ES and NQ move exactly same price movements, except that ES has smaller ticks movements, whereas NQ have larger range. Every time there was a breakout, you can see the breakout signals are generated on the supply and demand signals from BuySide Global. Every time you can see after breakout, if you see signal on a supply and demand, that's a perfect way to enter the trade. Again, breakout, retest after the strongest liquidity. Have a great day.